I'm Bias Trading here, and today we're going to be going over making an NQ algo and the lessons it has taught me. We're going to be going over 3 lessons of what I have learned from becoming a funded trader using an algo, and this was mainly about NQ. Now, first was the emotional aspect. This is one part I don't really think is talked about enough, and it's really about the idea that there is still a huge emotional element that comes with trading algos. Yes, an algo is taking out all of human emotion on the execution part and actually, on the trading part. We are still left with a lot of emotions on the back end with watching that performance, reacting to that performance, and not constantly changing that algo because you've seen it lose money, for example. So there is actually quite a lot of management of emotions still in with trading, even if you are using an algo. And this was something I think I wasn't exactly fully prepared for. I felt very uncomfortable for a good period of time doing this kind of algo project. And especially watching it trade live or even on a challenge account, for example. Now, I did do a couple of things to combat this. First was I made sure to develop a lot of trust in it using rigorous backtesting and robustness testing, such as walk forward testing and a couple other methods to make sure that, once this went live on unseen data, which is just market data, I had a good amount of confidence on its expectancy to perform well. However, at the end of the day, you'll never fully know. So it is just, a kind of time game to some extent. Lastly, is kind of the risk management part of it. I made sure to limit my stress and emotions in algorithmic trading by first doing this on a challenge account. Doing this on a challenge account really meant that there wasn't too much money in the game that I was risking. It was quite a small investment to at least test it on somewhat of a real case or live market data simulation, and that wasn't just full sim trading and kind of had it an end out. Now, this obviously isn't optimal for every algo because they do have quite limited drawdowns, and that's quite difficult to do, especially with algos. However, I did optimize this algo for limited drawdowns. So overall, that's kind of was my main outcome with these kind of strategies. Now, another thing was just staying informed to the algorithmic results and incorporating effective risk management strategies that I just mentioned. This really helped me minimize my stress and maintain confidence in my algo, plus also knowing that I didn't have too much at risk, at least currently. Additionally, the kind of last part was that it was very important for me to detach myself from the results, as it's very easy, like super easy, to only focus on the money being made when it is an algo and you're out of control of everything else. The only metric you can look at really is the P&L. Now, there's obviously way more other metrics, but that's the one your brain really goes to. And it's really important to detach yourself from it. Still look at it because it is a metric that you need to be aware of, but you also want to be looking, how it's performance based on the back test, on the walk forward test. Is it, overall slowly declining? Is it declining upwards? All this kind of stuff. So there are important factors to also look at. 2 is position sizing. During my journey of creating an NQ futures algorithm, I learned some really crucial lessons about position sizing and risk management. First, I realized that risk is often correlated with volatility, meaning that the higher market volatility usually leads to increased risk or in other downsides based on if your risk is static. Now, being aware of this relationship, I really was able to better manage my algo during those kind of periods by introducing some additional metrics. This was overall normally just based on different indicators, such as ATL or ARVL or whatever you really want to choose that could help you measure volatility. But those were kind of the main, ATL was the main one I really looked at. However, this has been an observation that I've seen break particular strategies I've made and also make other ones incredibly amazing. Some strategies perform way better with static risk, at least from my experience, and other ones, I feel like it is extremely crucial for it to perform well. It needs to be changing the risk based on the volatility. And that was something that took me quite a long time to learn because I'm from small caps, which is where I'm more focused on very static stops and, exits and profit targets, for example. Whereas in futures, flexibility seems to be a very key thing when creating strategies, and you want something to be flexible based on, is there an increase in volatility? Is there a decrease? That should either increase your size or lower your size, or increase your stops or lower your stops, or even profit targets, for example, or even adding partial take profits because it has increased volatility, so you're going for a longer profit target, but you're still taking partial along the way. So all those kind of things I really had to learn of implementing into an algo, which I never really thought about before because I personally don't do it in my small cap trading. Second is I really learned the importance of balancing risk to reward. Now, luckily in small caps, I'm quite used to one-to-one risk to reward, but I think in futures, it was even more important to focus on lower R setups, at least for my objective goals. So for currently, my algos do about 1-to-1 risk, sometimes doing even 0.8 to 1, which means they normally do better in long-term performance from what I've tested. However, it is very hard for newer people to this kind of idea of lower R setups to really grasp that can be profitable over the long run. Now, this was pretty critical for me to build this algo because capturing a high R setup or high R algo was mainly had other opportunity costs. This was mainly the idea that they either needed way larger bankroll to actually support the drawdowns, or two, there was other factors that weren't as important to me that were being increased, and I didn't really care about those, and I mainly wanted to focus on having a very consistent equity curve, which is R squared or whatever. And that really was my main focus for when creating these hours. Finally, this really taught me the lesson of position sizing can be a huge variable in strategies that work for futures and in algos. Sizing overall in manual trading, at least from my experience, wasn't a huge point of attention for me, mainly because I was quite static in my risk to reward and kind of sizing for small caps. Whereas in futures, it seems to be very important to be very flexible, and this is a good degree of freedom that can be very important to see how kind of results can change based on it. Now, lastly is the difference between ES and NQ. Throughout my experience of developing an NQ futures algorithm, I gained valuable insights into the difference between ES and NQ markets when it comes to intraday scalping. I observed that ES most of the time is a more thick order book, and more thicker movements, while NQ is a lot more fast-paced and overall volatile. At least currently, this may decline in future on. I may have to move markets, but at least currently, the NQ seems to be a lot better. This distinction has really taught me the importance of understanding each market's unique characteristics when designing trading algos. One key lesson I learned is that NQ is way more suitable for intraday scalping due to its higher volatility and intraday price movements. These conditions made it a lot more favorable for my trading strategies, allowing for greater profits potential based on historical and walk-forward testing. Additionally, I found that applying different technical indicators, timeframes, and risk indicators can work a lot better on different markets. So I highly recommend to test strategies on multiple futures markets to see what ones potentially work the best for those particular indicators you are looking at. Now, they will need tweaking, but this is a fascinating correlation. I really found that different markets perform really well with some different indicators and actually don't perform well with other ones. And it seems to be a thing you just kind of need to do trial and error and test them. But overall, there probably could be some theoretical reasoning for this. But at least for me, I don't really know them. I just can see it from the testing and the data I've done. This is definitely an interesting thing you should look into. Lastly is market conditions, and quantifying them was pretty much vital for this algo. I found it extremely hard to build an algo that had consistent low volatility on the equity curve until I added some kind of market structure filters, such as above or below a key EMA or MA on a higher time frame, or using inside candle bars as a gauge, for example. This was a really important point because I think at the beginning I tried to go at a point where my algos were very static. They weren't flexible to market volatility, as I mentioned. They weren't flexible to the market structure of the market or the previous movements of the market. Now, this mainly became a lack of knowledge. I didn't know that this would be a relevant thing because I was from small caps where previous historical movements didn't really impact a gap, for example, in the close red percentage, at least not to every extent. So when I entered the futures markets, I kind of came in with the same ideas, and that is very limiting. But luckily, I was aware that I didn't know everything, and I traded it for about 5 months to get some ideas of what I could be missing. And this was some really key points that have taught me, and hopefully I'll be able to create way more futures algos that perform even better based on these kind of learnings, and I can then also share those kind of lessons I've learned along the way. Now, thank you for watching, and if you enjoyed, please like and share it with anyone else who might be interested, and I really appreciate it.